If you had $5,000 sitting in your bank account right now, what would you do with it? Let it sit there earning almost nothing? Spend it on something that loses value? Or turn it into an income-producing asset that pays you month after month? Today, I'm going to show you exactly how to create passive income with $5,000, even if you're a beginner. First, let's be clear about something. Passive income does not mean zero effort. It means you do the work once, or you invest once, and then your money continues working for you over time. The goal is to move from trading time for money to owning assets that generate money. With $5,000, you're not going to retire tomorrow, but you can absolutely build a strong income foundation. Let's break this down step by step. The first and simplest strategy is dividend-paying ETFs. Instead of picking risky individual stocks, you can invest in a diversified dividend ETF. These funds hold dozens or even hundreds of companies that pay regular dividends. Dividends are payments companies distribute to shareholders, usually every quarter. If you invested $5,000 into a dividend ETF yielding around 3 to 4% annually, you could generate roughly $150 to $200 per year in passive income. That may not sound huge, but remember, this is just the beginning, and dividends can grow over time. The second strategy is high-quality REITs. REIT stands for Real Estate Investment Trust. It allows you to invest in real estate without buying physical property. REITs own income-producing properties like apartments, shopping centers, warehouses, or office buildings. By law, they must distribute most of their profits to investors as dividends. This means you can earn real estate income without managing tenants or fixing toilets. With $5,000 invested in diversified REIT ETFs or strong individual REITs, you could build another steady income stream. Now, let's talk about growth plus income. Instead of putting all $5,000 into high-yield investments, you could split it strategically. For example, $3,000 into a broad S&P 500 index fund for long-term growth, $1,000 into dividend ETFs for income, and $1,000 into REITs for real estate exposure. Why? Because growth matters. Passive income grows faster when your base investment grows. If your portfolio increases in value over the next 10 years, your dividend payments also increase. Now let's talk about something powerful: reinvesting your income. In the beginning, your passive income may seem small, but if you reinvest every dividend payment instead of spending it, you activate compounding. That means your dividends buy more shares. Those shares generate more dividends, and over time, the snowball effect becomes powerful. The next strategy is digital assets. With $5,000, you could build a simple digital income stream. For example, creating a niche website, starting a YouTube automation channel, or building a digital product like an ebook or online course. This approach requires more effort up front, but the income can scale much higher than dividend investing. However, if you're a complete beginner, I recommend starting with investments first. Build stable passive income through assets, then use your growing income to fund digital projects later. Another option is high-yield savings or money market funds for stability. These won't make you rich, but they provide safe returns while you plan your next move. In uncertain markets, safety plus liquidity matters. Now let's talk about realistic expectations. If you invest $5,000 wisely, you might generate a few $100s per year at first. That's normal. Passive income becomes powerful when you consistently add money. If you invest $5,000 today and then add $300 to $500 every month, your income potential multiplies over time. This is how wealth is built, not with one big move, but with consistent small moves. Also understand this: high returns usually mean high risk. If someone promises you 20% guaranteed passive income, that's a red flag. Sustainable passive income comes from real businesses, real estate, and diversified investments. Let's create a simple beginner example. You invest $5,000 into a diversified portfolio, earning an average total return of 8% annually, with about 3% paid as income. That's $150 per year in income. But if you reinvest and add money monthly, in 10 years your portfolio could potentially double or more, depending on consistency and market conditions. Passive income is not about getting rich next month. It's about building freedom over time. Now here's something most people miss. The goal isn't just passive income. The goal is financial independence. Passive income gives you options. It reduces stress. It gives you leverage. It gives you time. When your investments start covering small expenses, maybe your phone bill, groceries, or part of your rent, you feel the shift. Your money is working, not just sitting. And the earlier you start, the more powerful it becomes. If you're serious about creating passive income with $5,000, here's your simple action plan. Open a brokerage account, invest in diversified ETFs and REITs, reinvest your dividends, add money consistently every month, think long-term, avoid hype, avoid emotional decisions, avoid chasing trends. The biggest mistake people make is waiting for more money, waiting for the perfect time, waiting for the market to drop. The perfect time rarely comes. Action builds momentum. $5,000 is not small. It's a seed, and seeds grow when planted in the right environment. If you treat investing like a long-term system instead of a short-term gamble, passive income becomes inevitable. So the real question isn't whether $5,000 is enough. The real question is, will you let it sit, or will you make it work?